Good morning. Welcome to Trading Hour. It's a Thursday morning. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Hormuz Fatakia. And gains continue for our market. Sixth up, day of gains for the Nifty and the Sensex. The mid-cap, small caps moving in step. Frontline indices are up close to about 0.3, 0.4%. And today you've got strength coming in on the pharma index. The pharma index, erstwhile, for the last couple of days was quiet, but today the pharma index has made its move 1.5% on the Nifty Pharma Index, with names like Dr. Reddy's Cipla making it to the top 2 gainers list, at least on the Nifty, up nearly 1.5%. So pharma is a space which is doing quite well. Outside of that, realty is up. The Nifty Realty Index has rallied nearly 5% this week, so it's been showing strength. Oil and gas is up, and that's because big boy Reliance Industries has made its up move 1%. Remember, next week, Thursday, that's 6 working days from now, we've got the AGM. Usually a time where they make big bang announcements. They, talk about the way forward. So Street watches it very closely. Reliance Industries is a big mover. And banks, which were quiet, are also higher today. The Nifty Banking Index is up nearly 2%, with ICICI Bank leading from the front. Giving it company is Axis Bank. On the way down, softness seen in a couple of these FMCG quick commerce names. Tata Consumer, HUL, Eternal, Nestle on the way down. But we've got an action-packed 1 hour lined up for you on our show. So first up, we'll talk markets. We'll tell you what the strategy should be. Prateek Parekh, the equity strategist in Nuvama Group, joins in a bit. He's titled his note, Somber Start to the Year. The big story of the day is Clean Science, which saw a large block deal of 2 crore shares changing hands. We put the spotlight in the crypto space as always. Joining in is the CEO of Sol Strategies, Leah Wald. We'll also put the focus on the newsmaker and the big exclusive of the day, Aurobindo Pharma, besides other stocks like Indigo and pipe makers. But Hormuz has now moved on. Okay, we'll get to Hormuz in just a bit to talk about some of the big movers in trade. But, outside of that, in the frontline action, you've got BEL. BEL was soft so far this week. Week to date, BEL is down 2%, but today it's made an up move. So after a little bit of an underperformance, you are seeing BEL higher, and L&T too is showing some strength. But as promised, let's talk about the mid-caps, the top movers in today's trade. Hormuz joins it.
Yeah, indeed. After the Clean Sciences drama that took place in the first hour of trade, there are a lot of other movers that are moving around in the broader markets, news flow and otherwise. Jupiter Wagons, of course, the wheel sets order that it won last evening has taken the stock 10% higher, the biggest single day gain since January of this year. At one point was up even 12-13%. Now it is back to its 50-day moving average of 361. Just a few minutes earlier, it was trading at its 100 DMA, which was at 371. So these are the two main levels that you need to track on the stock. 2.5 crore shares having changed hands already in the first couple of hours of trade, compared to a 20-day average of just close to 3.5 lakh shares. And despite this move, the stock, in line with most of the other railway-linked names, is down 25% so far this year. The other major mover today has been Zinka Logistics. It's the 4th straight day of gains for the stock, and it listed last year towards the end of 2024, and August has turned out to be the best month the stock has had since listing, with gains of over 30%. And mind you, it was a subdued subscription that the IPO had received. It was subscribed only 1.9 times. In fact, the non-institutional portion was not even fully subscribed. In fact, it was not even subscribed by a quarter. But despite this subdued response to the IPO, the stock is up 130% from its IPO price of 273. Insurance stocks are moving around today. New India Assurance is one such name, and this 5.5% surge is only the 8th instance in the last 5 weeks that the stock is trading with gains. It had already more than 1 crore shares change hands, compared to a 20-day average of around 35 lakh shares, and courtesy of this move today, the stock has turned positive on a year-to-date basis. And lastly, Venky's India, another name that has sprung up on the list of gainers today, is the 4th straight day of gains for the stock, now 14% higher as we speak, and it has gained only in the last 5 sessions in the last 5 weeks before this 4-day gaining streak that it had. It has had already a lakh and a half shares that have changed hands, compared to a 20-day average of just 7,000. And despite this move that we have seen this month, the stock is still down 17% on a year-to-date basis, Reema.
Thank you very much for that. Let's talk about markets and where we're headed. Prateek Parekh, equity strategist, Nuvama Group, joins in to discuss his view. Prateek, your note, which is titled Somber Start to the Year, just appears that we're a bit of a funk, because on one hand, You've got those potential GST reforms. There are some signs that consumption is picking up. Plus, domestic flows continue to be very strong. But on the other hand, earnings growth continues to disappoint quarter after quarter. So where are we headed? And what is the advice in such a market?
Yeah. Yeah. Thanks, Rima, for having me over. It's always a pleasure being on the show. I think as you rightly pointed out, the challenge today is of earnings growth. Earnings growth for last 4-5 quarters has been stuck at around 8-9% range. This is clearly on a softer side and has been disappointing consensus expectations of recovery. The reason for it to stall has essentially been that the profit margins, which were the main drivers of recovery post-COVID, have stopped expanding, and top line growth, is stuck at 8-9% range. Now, within top line, every 2 quarters you have different sectors which take it down and a few sectors which move higher. But at an aggregate level, we are not seeing a material improvement in top line. Now, as we go ahead, I think earnings revival will be the most important for markets. On that front, we have, our own cautious view on the same. The simple reason is that first, margins which are elevated have more downside risk than upside risk. And second, on the top line part as well, while there are some pockets which is getting stimulus like GST, like the consumption space from potential GST cuts and income tax cuts. But at the same time, there are also headwinds which are emanating potentially from the global situation where the trade wars, while India's direct exposure is not very high, but I think if overall global growth slows down, it will have ripple effects across sectors and across industries. And to that extent, we personally think that earnings acceleration, which Street is still hoping, may perhaps have to wait for some more time. In such a scenario, clearly, markets, it's difficult for them to move higher, especially at a time where you're having a very large supply coming in from participants. Promoters and private equities are, bringing on a large amount of supply, which is more than offsetting the very strong domestic flows of sorts. So I think we are in a sluggish situation where upside is capped by supply. And earnings downside risk do prevail. And in such a time, I think the areas where stimulus is being injected are the ones perhaps will do probably better, where consumption should do better than capex and large caps should potentially do better than mid caps is what I would argue, Rima.
Got that. How many more quarters of this middling 8-9% kind of earnings growth do you foresee? We've already had 4-5 quarters, as you said. How many more to go? Because again, for FY27, expectation is of a double-digit growth.
Yeah. See, it's very difficult to be precise because there are many moving parts and variables. But I think the big delta on the upside, I think, will come when we have global growth moving on the right side, or we have domestic credit growth accelerating. As of now, the visibility on the same seems limited. So probably another couple of more quarters for sure, where we'll have this middling kind of an earnings growth, and post that, depending on how policy stimulus is or the demand environment is, we can take a fresh assessment. But until then, it's difficult to have a double-digit earnings growth per se, Rima.
Prateek, good morning. Thank you for joining in. You mentioned that double-digit earnings growth a little difficult, at least in the near term. So in light of this, considering the global uncertainties that we are facing, how does one make his portfolio? We heard a lot from a lot of the people on the street that your focus needs to be on domestic-focused companies that don't have too much exposure to these global headwinds. Which among these domestic-oriented companies would you advise investors to place their bets on?
So I think there are many baskets in the domestic oriented space. Clearly, I think the ones that one should bet on is on the consumption pack for 2 or 3 reasons. One, consumption by design is less cyclical than rest of it. So in a time where economy is facing cyclical headwinds, consumption by design tends to outperform versus capex. We are overweight consumer space, and even within consumer, we like FMCG more, and some pockets of discretionary consumption, which will potentially benefit from the GST tax cuts. Second space, I think, is on the domestic front. I think it's probably cement. This is a space where, after a lot of time, we are seeing prices coming up, moving higher. GST rate cuts will potentially help support demand as well. And to that extent, they should do relatively better. And third is the large private banks and insurance companies, where we think that the earnings risk are somewhat limited. And especially the insurance companies, where we think that insurance companies, where they can benefit from GST tax cuts, and also they are their earnings growth or has been very steady, and we see limited risk to the same per se owners. But
Can you
overall,
tell?
I think one should maintain a defensive bias and should avoid the domestic cyclicals like industrials, power, and even real estate is what I would argue.
From the last time we spoke, Prateek, I think that was sometime in April, about 3 months back. Has there been any change in your portfolio?
We made some minor tweaks since then. We have moved, metals to neutral, especially the ferrous space, where because, given the safeguard duty, we think the downside is protected, and with a lot of capacity being commissioned, volume growth should improve over there. Apart from that, we really haven't made a big change of sorts per se, Rima, because we have been positioned for consumption, and that has the GST cuts have only helped embolden our call, is what I would argue.
And can you tell us your top picks in the consumer space, both durable and staples?
So I think I won't comment on the stocks per se, but I think directionally, staples I think should do better because finally they are trying to get volume growth in place, and also in a world where you have deflation, their margin headwinds perhaps should be lesser. In the durable space or in the discretionary consumption space, I think some of the two-wheeler names to us look interesting, given that they'll also benefit from the GST tax cuts, and we are positioned for the same per se, Rima.
What about power? Prateek, you mentioned you were not so bullish on power going forward, if I heard you correctly.
Yeah, that's right, Thomas.
Why is that so? Because if I can summarize this, that the demand for power is only going to go higher in a country as big as India is. And with more competition increasing and more players coming into this space, do you see that as one of the reasons why you're not so bullish? If you could explain that.
Yeah. So I think two or three reasons per se, Thomas. First is I think power demand in India, if you look at it, it is cyclical. I mean, perhaps less than others, but it is certainly cyclical. For power demand, which for last 12 months has been around 2-3% range, for it to accelerate and move towards 6-7% range, we need industrial recovery. Now that is going to be difficult in a world where export growth is weak and we are having fiscal consolidation. So our main call on power is that the demand environment, which has been stuck in 2-3% range, perhaps can it go to 1 or 2 percentage points higher? Possibly yes, but it's not going to rise materially to cause a power deficit and for these companies to start making higher ROEs. At the same time, we are seeing a lot of supply in the pipeline, and if those supply are not compensated with higher demand, the ROEs and pricing of these power companies, will falter. So that's where our belief is that power in India is a cyclical or an industrial play. If industrial demand goes up, power demand goes up, and that in turn leads to higher ROEs for the entire chain of sorts. The distribution of the same depends on which space is in which part of the capex cycle. But I think from an overall demand perspective, we are less sanguine about the same. And that's why on power as well, we have a somewhat cautious view given the elevated valuations per se.
Thank you, Prateek, for sparing time and joining us today. Pleasure having you as always. Prateek Parekh there of the Nuvama Group. Take a short break. Leah Wald from Soul Strategies joins us on the other side as she takes a deep dive into the world of cryptos with Manisha Gupta. Welcome back. Let's now go across to SEBI Chairman Tuhin Kanta Pandey, who is addressing the FICCI Annual Capital Markets Conference.
EMS, these acronyms now occupy important place in Indian capital market. We need to constantly create new products and new opportunities while co-creating with industry and investors optimum regulations for such growth areas. With a booming IPO market, investors are eagerly anticipating what is next. Yet, pre-listing information is often not enough for investors to take an investment decision. Can we think of an initiative on a pilot basis for a regulated venue where pre-IPO companies can choose to trade subject to certain disclosures? Here are some key challenges. Which are the unnecessary processes and pain points that cause avoidable friction in fundraising, disclosures, and investor onboarding, and how they can be removed? Which emerging areas, products, and asset classes can be developed for creating both demand and supply of capital? Let me come to technology, the second part of this theme for today. Technology is a trust multiplier, not a showpiece. Indian capital markets have constantly evolved technologically. Great tech starts with having the core infrastructure in place, reduced settlement timelines, direct payouts, resilient MI systems, market surveillance, and grievance systems. SEBI has been in the forefront of applying and promoting SupTech and RegTech solutions. That is how investor trust multiplies. But trust fails at the edge, where investors meet the market sometimes. There are many instances of fake apps, cloned websites, and unregistered entities misleading investors. We are working with social platforms to take down misleading market content before damage spreads. We'll intensify our investor awareness and education campaigns on pernicious cyber frauds. Scores has been revamped to cut grievance timelines. Smart ODR is live and has resolved 7,000 disputes worth about 500 crore. These are safety nets that give first-time investors the confidence to stay invested. On the industry side, we expect clean edges, no unregulated advice, clear and timely disclosures, and visible SEBI registration details on every app, site, and social media handles. We have to address the rise of artificial intelligence. AI has the potential to unlock new forms of customer engagement, enable alternate approaches to risk assessments, and monitoring, fraud detection, and financial inclusion. At the same time, increased adoption of AI could amplify existing challenges to data protection and cybersecurity, among others. We have to think of AI as an assist, not a substitute for judgment. SEBI's proposed guiding principles for AI/ML emphasize a tiered approach, data and cyber controls, and clear accountability. RBI's Free AI Committee report also complements this. The message from regulators is consistent: adopt AI, but with safeguards. The quick question here: are our organization and boards equipped to guide on responsible AI adoption, to balance innovation with accountability? Transparency, the third theme of the conference today. The welcome mat. Transparency is how first-time investors say yes. For new investors, three things matter: clarity, comparability, and fair rules that are enforced. As a system, we need to push for clearer communication with investors, faster rumor verification, and incentive disclosures so investors know who gets paid for what and when. If a SEBI registered intermediary offers services outside SEBI's ambit, it must say so upfront, along with the risk and recourse. Transparency attracts long-term capital, keeps capital durable, and widens retail ownership. SEBI's regulatory approach has been and will remain consultative.
Welcome back. Holding steady with a gain of about 1/3 of a percentage point. The Nifty above 25,100. This week, we've seen a rally of close to about 2% on the Nifty, while the Midcap index has gained nearly 3%, and it's the 6th consecutive day of gains for the benchmark indices. Soni Patnaik of JM Financial Services is now with us. Soni, a couple of good days now, but can we head higher from here on?
Hi, good morning, Rima. Thank you for having me on the show. So I think, yes, Nifty's resistance where we can see is around 25,300 odd levels. I think that's the level where it can test probably by tomorrow as well. It is holding quite strongly, and yesterday it gave a very strong close above the 25,000 mark as well. So I think that support seen 25,300 is the next levels that can be seen. Similarly, if we talk about Bank Nifty, I think Bank Nifty is also holding above the 55,000 mark on a closing basis, which is its crucial level. So I think the next level that Bank Nifty can head towards is towards 56,500. So we advise to hold the longs with the support levels for the indices.
What about specific stocks? Soni, morning.
Good morning, Harma. So we have an official recommendation giving in buy for Masdog today. The stock is looking quite strong. It is crossing above its 20 DEMA as well. So one can buy Masdog Dock in cash levels with a stop loss of 2725 for a positional target of 3,000. The second official recommendation that we've given is a buy in Trend. Now, Trend is approaching to break above its 200 DEMA. So one can buy Trend on slight declines towards 5450, keeping a stop loss of 5300 and a positional target of 5600 to 5640 can be seen.
Dock and Trent, interesting recommendations. Soni, very quickly, if you could share a chart check on Nazara as well. The stock has been in a free fall since yesterday, 10% lower, more than double digits, another 8% today as well.
Sure. So I think the stock has broken its crucial support below 1150 with volumes, and it has come at a very strong breakdown. I think the stock is positionally looking weak. The next support levels that one can see is towards 1,050 odd mark. Any recovery can only be seen if it's able to cross at 1,200, 1,220 odd levels. I think that's a bit far-fetched for now, and one must wait for the support levels of 1,050 to get tested.
All right, Soni, thank you so much for sparing time and joining us today with your views on the index and specific stocks as well. A lot more downside anticipated on Nazara. Looking weak on the charts positionally is what Soni Patnaik has to say. Take a short break. On the other side, we put the spotlight on the other big stock of the morning, Clean Science. On the other side, we get you the entire event that played out in that span of 40 minutes on our special segment, The Big Story. Welcome back. The big story of the day, Clean Sciences, and it was supposed to have a block deal to take place. The promoter sold 24% stake through this block. Sonal is here to tell us first about what exactly happened in the block deal, what was supposed to be sold, what got sold, and then we take forward what eventually ended up transpiring. Sonal.
Thank you so much for that. Yes, a lot of swings in the stock, right? It's been a roller coaster ride since morning. But yes, a 17% swing on Clean Science and Technology in terms of share price move today. Remember, the low today was 1,070 and the high was around 2,150. So there has been a lot of swings. So the story was, sources yesterday suggested us that promoters will go ahead and sell 24% stake in the company. But at around 9:25 a.m., the initial data suggested that 56% equity has actually quickly changed hands. So that was way more than what the sources were suggesting as well. And the shares available as well with the Boob family. We spoke to the management at around 9:41. They confirmed to us that it was a fat finger trade. They said that there was a punching error in block deals by one of the investment bankers, which is Parker Vendis, and block deals are only for 24%, not for 56%, and that was being corrected. And that is when we saw a sharp reaction on the stock as well. The stock recovered 13% from the lows after this clarification, and this is something that happened just in 30 minutes. So big swing in the stock is what we saw.
Indeed, the big story is not the fact that the promoters sold 24%, but also the error by the dealers. But now tell us, right, at the end of the day, it's still a large 24% stake sale done by the promoter. How does the promoter shareholding look like now?
You know, Reema, this is something that the promoters had indicated in Q1 conference call as well, that the Boob family, they plan to reduce their stake from 75% to 51%. That is basically 24% stake will be divested by that family for estate planning purposes. So this is something which was expected, and this has come exactly in line what the street was working with. And promoter shareholding currently around that 74.96%. The big promoters and the shares will come up for you on the screen with Ashok Boob having 12.8%. Ashok Kumar Sikchi around 10%. So entire list will be there for you on the screen. So these are the possible names who would have sold it. But yes, as it was said by the management as well, and as sources have suggested, Ashok Boob and Krishna Kumar Boob will be selling the stake, and promoter stake post this big chunk that has been sold will come down to 50.96%. And do remember, the stock in last 1 year has not done so well. It's down 24%. So it's not like by selling they have taken back any gains in terms of stock price.
Indeed, in fact, it's down almost 30% from that post-listing high as well, which is close to 1650. You know, Sonal, what do the financials look like? Tell us more on that.
You know, let's start with Q1 because that's the most recent one. It was a steady quarter, but yes, there was compression in margins. Profits also were just up 6% because of the tax impact that the company saw this time around. But management also had revised their EBITDA growth guidance. So that came as a dampener. They said they will be able to do 15 to 18% from 18 to 20% that they had indicated earlier. They said further clarity is only expected in the second quarter of FY26. However, they expect some growth coming in from third quarter. It would be because of new product launches that will come by in second half of FY26, capacity utilization, operating leverage, and market expansion as well. But if we go back a little and see what kind of growth has the company done in last 5 years, revenue CAGR at 17% and PAT CAGR at 16%. So it is in high double digits, but other companies have seen it at even higher levels because from 2020 to 2023, some of these chemical companies had seen stellar growth. In terms of margins as well, if you look at FY21, when the company came with its IPO, it was 51% and it has fallen to levels of 43% by FY25. Now do remember, stock listed back in July 2021 at 1643. So the stock is still trading below its listing price currently. The valuations as well, not very cheap, not very expensive as well, going by the peer group. It trades at 34 times FY27 EPS. But yes, it is still below the listing price. So it's not like promoters have taken massive gains back home.
And what's the peer group valuation? This company is at 34 times.
Basically, it's a different company set all over. You can't really compare chemicals per se. It has a different product profile already. SRF would be trading at something like 26 times, Naveen Fluorine at 31 times. There are companies which are trading at 50 times as well. So this is around 34 times, but there is no direct peer as such for Clean Science.
Right, Sonal, thank you so much for summarizing the entire turn of events at Clean Science on expected lines, mind you. As Sonal just clarified, it was on the block deal, was on expected lines. The management had mentioned that in the earnings call as well, that they look to bring their stake down, and they have done so in a proportion that they had earlier spoken about. Sonal, thank you for joining in Clean Science. Look at that swing in the first hour of the trade. Was down 7%, then was up 7%, and now is trading with losses of close to around 0.6%. But the index, though, 75 points higher. The index has had its own share of swings, though, since the morning, today being the weekly options expiry, but for now holding on to gains of around 75 points. Sudarshan is here to tell us what the FNO data is suggesting on the weekly expiry day. Sudarshan.
So it's a good day of trade ahead of weekly expiry. We are seeing that Nifty is comfortably placed above 25,100 we are seeing broad-based gains and support for Nifty coming from Pharma Pack and also Reliance Industries higher after the news flow related to tariff. Now, if you take a look at the volatility index, it has also fallen below 12 and even put call ratio has risen to 1.31 from previous day's level of 1.27. If you look at the options data, sellers are active on two put options that are 25,100 and 25,000. We are seeing big option build up, and at the same time premium has seen a sharp fall. That indicates you that Nifty is going to expire somewhere around between 25,000 to 25,100. If you look at the call options, 25,100 premium has gone up, and similar pattern was seen in 25,150. Support for Nifty now, what it used to be resistance has now become support, that is 25,015, and resistance has now moved higher to first resistance is 25,150. If we cross the next resistance comes around 25,250, that is the recent high. Two stocks I have taken. First one is Mankind, that is seeing fresh longs, and second one is Indigo, that is seeing fresh shorts.
Thank you very much for that. Get into break. On the other side, we'll get to the NSE Index rebalancing event that's expected tomorrow.
CNBC-TV18 presents Crypto Corner, powered by CoinDCX.
Well, as we put the spotlight and unpack details about the crypto space, we today are joined by Leah Wald, our CEO of Soul Strategies. Leah, hi, thank you so much for joining in. While 2025 has been a great year, we've seen progression really in NFTs and DeFi and tokenization, and of course the crypto price is also. How are you specifically looking at the DeFi as a space, the kind of projects that this space seems to be getting into with more partners and more projects coming in? Where do you see this market heading?
I believe that DeFi projects were always way too risky in the past. They were misunderstood, and everybody really gravitated there just for juicing that extra yield. And sometimes it was better for the asset managers or more conservative investors to stay away from DeFi entirely. Now, it's a completely different game. You have the largest institutional investors and nation states in the world actually integrating with DeFi. I think that one example that we could point to is tokenization and the tokenization of real world assets actually being integrated with with DeFi, which is just remarkable. As one example, Apollo, their tokenized credit fund crossed 100 million in 6 months, and that offered 11% returns. They were also using DeFi integrations, and DeFi can yield up to 16%. Institutional giants like Coinbase and Kraken were early investors there. You also have Franklin Templeton's innovation. So their Benji platform operates on 8 blockchains with over 780 million in assets, and that even expanded to VeChain. So what they're really looking for there is, again, using blockchains that have that native yield in order to, again, have a higher return. Now let's go to the big kahuna, right? BUIDL. So BlackRock launched the BUIDL fund, and it's now accepted as collateral on crypto.com, on Deribit. I mean, it's a massive multi-billion-dollar fund. This creates yield boosting opportunities that, again, can push returns from 11 to 16%. So the tokenization premium is real. You also see just generally that projection increasing. Boston Consulting Group projected 16 trillion in tokenized assets by 2030. We're at 26 billion today, so that's a 600x opportunity. So I'd say this isn't about crypto going mainstream. It's about mainstream finance being rebuilt on blockchain rails. And the opportunity to utilize DeFi makes that even bigger of an opportunity. So really an infrastructure replacement, not speculation at this point.
Leah, Solana has been known for its speed and low fees, scalability, real utility as well. But going forward, are you looking at more and more competition coming in? And how is Solana looking to tackle that?
Solana, the way we see it and the way the market sees it, you have a very high performance blockchain designed for speed, scalability, capable of processing thousands of transactions per second with effectively near zero fees. So we see that as making it superior to the slower, more congested networks, i.e. Ethereum, which can take 12 seconds, right? So there's definitely competitors to Solana, but we do think that it's going to be the winner in the end of the day for financial rails. And that's why you're seeing a proliferation of, again, those tokenized asset projects, even on Solana. So definitely a lot of opportunities out there. There's other large companies like Coinbase who are betting on other blockchains like Base, but we're definitely betting on Solana here.
Leah, there was a very interesting report from Bernstein saying that the crypto bull market will extend into 2027, with Bitcoin reaching levels like $150,000 and $200,000 as well in the next year, and the upside broadening not just to Bitcoin but to Ether, Solana and DeFi. What is your own sense?
I used to always be cheeky and say 1 Bitcoin equaled 1 Bitcoin, but I'll stop doing that now that there's a little more fundamentals behind it. You're absolutely right. There's a lot of pie in the sky, price predictions out there, but there's also just some of the smartest investors in the world, like Cathie Wood and others, and the way that Larry Fink speaks about Bitcoin and other potentials that are astronomically high, and yet backed up by their own projection models that are very strong. I mean, I've heard $1 million per Bitcoin by 2030 thrown out there. You're seeing 124,000. Who could have believed that only a few years ago? I mean, even after FTX, we had black eyes. In the United States, a lot of us working in the crypto industry were debanked. But now you just have everybody that's supportive and actually making this industry work and making it available for the largest asset managers in the world, like Bitcoin, like BlackRock, to actually jump in. So I'm very bullish. From the projections that I've seen of research analysts that I really respect, I wouldn't be surprised if we did reach 175,000 by the end of the year. Now, that's even a low estimate compared to some of the analysts and investment managers that I've seen, but I can see it happening.
All right. 175,000 for Bitcoin by the end of this year. And well, as people have been talking about $1 million as well. We'll come to that later, Leah. But it's not just about the prices, right? The mining, the hash rates, the NFTs, the ETFs, and a couple of Solana ETFs as well are doing quite well. What is next now to watch for crypto enthusiasts?
You nailed it on the ETFs, at least because that's my old world. You now have, as mentioned, a couple Solana ETFs in the market. I'm going to go US cap market specific here, but we can speak about global cap markets and their advances on the Solana ETFs as well. I'm going to speak about Solana for a second, and then I'll go back to other altcoins. But at least for Solana, I think it's important because it's a synecdoche of other altcoins being accepted. So you did have the acceptance, which was a 1940 Act product by REC shares of a stake SOL ETF. Now that is not a spot product, so it's a bit different, but we have had advances on the spot products as well for in-kind creations. Why does this matter? This does matter so much because the accumulation that product has already seen by REC shares is enormous and just shows the growing demand for other altcoin ETFs. So as of right now, having Bitcoin, having ETH, all the derivatives based around that, also the leveraged, inverse, etc., Bitcoin miners in the United States, it's just shown all that demand that has just jumped into the race. And it's just showing that there's going to be more demand when other spot products and other alternative currencies are actually accepted and approved by the SEC. You've seen also successful trading of different altcoins all around the world for many years now. And even in Singapore, you saw DBS custodying most cryptocurrencies back in, I believe it was 2020, early 2020. So I think that, to your point, you're going to see just all the major advances. I think you're going to continue to see nation states accumulating, potentially more nation states making Bitcoin legal tender, similar to how El Salvador did. And I think that in nations that really care about, and capital markets that care about ETFs, you're going to see more of those products come out. That matters, just as a note for the viewers, because most allocators in the United States can only buy within the ETF wrapper. They cannot buy through spot products. So that really is the gatekeeper for having those allocations in a meaningful way. That's why you saw so much into these ETFs, as well as these armies on the ground of wholesalers of these ETFs just going out and educating everybody about them. So that is a very serious way to provide a catalyst and formal push for adoption, even into the cryptocurrency itself, by having very smart sales folks from BlackRock, Bitwise, etc., just educating people about why they matter, whether it's buying spot or whether it's buying through an ETF wrapper. So I think those are the major things we're keeping our eyes on.
Leah, thank you for those interesting insights. Manisha, thank you for joining in as well. But just before we call time on this edition of Trading Hour, pull up BSE and pull up Angel One flashes at the bottom of your screen, which mentioned the SEBI chairman's remarks on the need to increase the tenure for equity derivatives. And he also mentioned that there will be a consultation paper with regards to an increase in the tenure of equity derivatives. He was speaking at the FICCI Annual Capital Markets Conference, and you can see the fall there in shares of BSE, almost 6% lower now on the stock. Angel One too has seen a similar fall, all down almost 4.5% there as well. Both of them now at the lowest point of the day. And these were the remarks made by the SEBI chairperson on the need to increase the tenure of equity derivatives, and there will be a consultation paper that will be issued in this regard. Let us also listen in to what the SEBI chairperson said on the sidelines of that FICCI conference.
See, improving the tenure is really means that, whether we can sort of have longer term, more longer term derivatives. But all this is to be done in consultation. As I said, that in what form, how, we'll have the consultations.
So
and
we'll have a consultation paper coming?
Yes. Nothing will be on,
By when will the consultation take place?
No, I mean, I can't
is
give
it like
you
in a month, in a week?
No, I can't tell you that, but that's the thinking process we have.
Your preference is for a longer...
Yes, I mean, that is qualitatively we have to see, but we have to calibrate it. So if you really look at my statement, where I said in a calibrated manner.
In a calibrated manner, and nothing will be done without consultation. The two key takeaways from those remarks made by the SEBI chairperson, both BSE and Angel One at the lowest point of the day. We'll take this conversation forward on the other side of the break on Halftime Report. But from Rima and me, thank you so much for watching. Call time on this edition of Trading Hour.